Good morning, everyone. My name is Sriram from the Commodity and Currency Research Desk at Reliance Securities. This is the Commodity and Currency Outlook. So, starting with the commodity side of things, starting with energy, international and domestic oil prices tumbled on Tuesday's trade as concerns returned about the prospect of more interest rate hikes by several central banks and COVID lockdowns weakening the fuel demand. A stronger US dollar in yesterday's trade also weighed on oil prices. On the gas side of things, natural gas prices internationally and domestically tumbled in yesterday's trade, dragged down by a downwardly revised demand forecast for the next week or so. Of course, a potential rise in US supplies also weighed on sentiments. So, looking ahead, crude oil prices can continue to weaken further, pressured by weak demand expectations, as investors also shrugged off the OPEC nominal output cuts. And we see markets remaining under pressure over the next couple of trading sessions. And the range for the domestic crude oil prices is anywhere between 6,700 on the lower side to 7,100 on the upside of things. On the gas side too, we see markets continue to face headwinds on the upside of things amid weak demand concerns, of course, and increasing supply. The latest news from the US revealed that Freeport LNG terminal is going to postpone their reopening till November. Previously it was in October. So this will allow the supplies to improve in the local US markets, and that will also weigh on sentiments for the gas side. So overall, gas prices can also continue to remain on the sluggish side over the next few days. Moving to the bullion side of things, international and domestic gold prices again remain under pressure as the dollar and the US benchmark yields climbed amid expectations for an aggressive policy rate hike rate hike path by the US Federal Reserve. Of course, the market is also expecting that the ECB, the European Central Bank, also to hike rates by 75 bips in this week to cool inflation concerns. So that has also weighed on sentiment. So overall, we feel gold and silver prices will continue to remain sluggish over the next few days. Again, stronger dollar and strength in the US bond deals will continue to weigh on sentiments. But again, the main focus will be on the ECB meeting due on Thursday. So that will be the key trigger for the markets this week. So the range till that time for the international markets remains between 1675 and 1725. And the domestic, we see a range between 49,950, 900 on the lower side to 50,500 on the upside of things in over the next few sessions. On the base metals, copper and aluminium remained on the sluggish side. Copper recovered by the end of the session, but aluminium remained under pressure as strong dollars and worries over economic growth overshadowed production cuts in Europe. High energy prices have forced smelters to reduce outputs, but markets have shrugged off this reduction in output and focused on China's COVID curbs. The country has imposed fresh curbs there in Chengdu province, and that continues to remain the key trigger for the markets. Again, weak demand can remain a cause of concern again going forward for the base metal side. So we see more weakening of copper and aluminium prices over the next 2 days. And like the precious metals, the ECB meet and other data points along with Fed speeches this week will be the key trigger for the markets for the commodity side of things. Moving to the currency side, the Indian rupee opened on the weaker side of things this Wednesday morning trade, tracking the overnight strength of the greenback. Investors will continue to focus on the rigid China COVID policy, which is threatening to derail their already challenging economy recovery. The markets also shrugged off the recent steps taken by the Chinese central bank, who have reduced the forex reserve ratio by about 200 bips to support the economy, but markets have shrugged off. So in turn, a weakening yuan will have a rub-off effect on our local unit as well, which is already facing headwinds from persistently high trade deficits and high inflation worries. So we see further weakening for the rupee going forward. Again, the dollar also continued to move higher over the last few sessions, and a further rise in the dollar index will also weigh on sentiment. So we see further weakening towards 80.05, 80.15 for the rupee over the next couple of trading days. the only saving point for the currency can be the RBI's intervention. They have intervened aggressively over the last few weeks, so further intervention can cap further weakness for the currency. But overall, weak fundamentals will continue to dominate the sentiments in our currency markets. That's it from our side. Thank you for listening. Have a pleasant day. Thank you.